to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo, party, woohoo. Isn't that weird? I thought I saw other people in the hangout with us here this morning, but I guess they have gone off to greener pastures. Yeah. I did notice some people have said they're having a little bit of problem with Zoom lately. So whoever you were that were in the call, I don't think you're alone. A few people are having a problem with that. But anyway, happy Monday morning, TGIM, I suppose, and all that. Actually, a couple of interesting sort of news pieces to move the market through the weekend. I think that they're trying on, who knows, like some clown over on the west coast of North America is going to know what the hell's going on. But anyway, it does feel as though maybe this Israeli thing in the Gaza Strip is maybe winding down. I don't know. I guess I saw articles saying that they were trying to sort of finish stuff up in the north, a part of that territory. But you do see sort of headlines about things like the war maybe spreading. I don't know whether that's really a market moving event, but I did see crude oil come off quite a big chunk. So you wonder whether maybe things calming down a little bit is helping to ease prices there. We did see probably the most important news event that I saw through the weekend. The U.S. government is come to some sort of tentative agreement amongst the politicians to try and pass a budget. I don't even know whether it's a budget or is it just a funding bill kind of idea. It was like $1.5 trillion. Like, how the hell do you even wrap your head around a number like that? But I do think that relieved quite a bit of stress in the marketplace. So we'll see how that reverberates. And I get the impression that we've been sort of watching being January. Where is our January barometer? Here we are. Kind of, generally speaking, the January barometer for the first week of January, I tell you, didn't really spit out that friendly of a message there. Having said that, like the first hour of trading, first day of trading, kind of noticed that there was a bit of an uptick here, sort of mid cycle following sort of the initial burst lower, and then sort of halfway through the year we rolled over, if we use the first hour and first day as kind of a measure, and not really much through here, and then we rolled back over maybe a little bit. So put them all together, I've been kind of thinking that there should be maybe some sort of push up here through the middle of the month. And as you can see, stock market's out of the gate here first thing this morning, moving smartly higher there. I suppose hindsight being 2020, although I don't think I have it still on the screen here. But we did strap on a short there for sort of demonstration purposes last week. I think actually it was over here. And heading into that employment report on Friday, it's probably not a bad idea to hop off. So we actually exited this little position right here. Actually, I think we can show you this. Executions, right there. So I'm thinking we get a nice little rally right back into reload short zones. And if we start getting market structure failures, again, that's sort of thinking at January barometer, sort of mid-month kind of idea. There is a bit of a push up and then we roll back over and head down. I'll just, for demonstration purposes for the site, that kind of thing. I'll be keeping an eye out for some sort of failure in good old reload zones. All right. So Chris is, we're going to try and make sure that this is like 5, well, maybe 10, 20-minute kind of video. So thank you, Chris, for the reminder. Appreciate it. Coming out of the gate, I think probably the biggest thing that caught my attention today was, of course, this crude oil market just got smoked here this morning. Left huge gaps on things like the oil ETF. So my hunch is we're probably going to head right back up through the week. But nonetheless, pretty sanguine start to the day. In fact, actually, you can see I'll do a little bit of bottom fishing here against these lows, just having fun. Stop against the low. If we got blown out, we got blown out. And actually, it was interesting to see both the. Let's put that stuff away so I don't get confused. Both the crude and the gold were coming off here smartly today. So looking at levels, it's probably not a bad thing to do for our public broadcast here. Doing a little bit of bottom fishing here against here. I don't know whether there's really any traction. You can see probably need to come down to this 69 level into this tail, candle body lows for trade location, Hoag's kickoff levels. And this is just a little sort of kind of almost no man's land there. The gold, same sort of thing. We did bounce off of this key level here first thing this morning. Gold was down quite a chunk here this morning. They left quite a tail here, so I wouldn't be surprised if that's a trade location at some point down the road. Is this some sort of head and shoulders top? Could be. So interesting to see, though, both the gold and the oil down. With the oil down as much as it is, and oil is a leading commodity. We probably should see the gold at some point down the road play catch up. The oil really has come off quite a chunk here. So, as I had said earlier, January Barometer. U.S. budget looks like it's passing, so a little bit less stress there. And then I also noticed, and you can make the argument that I've talked to you guys about this before quite often. You'll see oil move one direction and the tech stocks move the exact opposite direction. We've talked lots about that in the past. So not a big surprise to see tech stocks actually rallying. And if we actually look at some of the tech stocks in particular, like I like to follow the semiconductors as a pretty good proxy on the tech sector. They always say that the SOX, the semiconductor sector, is sort of the most ultimate leading indicator. I'm not quite sure which is the best one to use here. I'll just do SMH, it's the semiconductor ETF. And if we put that on a daily chart, okay. So is this topping out? I don't know, but higher highs and higher lows looks like it's heading higher. And probably more importantly, NVIDIA, sort of the leader in that space right now. I think I saw him pushing to new highs here earlier this morning. Yep, very bullish. So my hunch is the semiconductor sector as a leading indicator, text proxies. We are coming into earnings season relatively soon. You can see there is earnings announcements. I guess this is still about a month or so away. I have been hearing a lot of people talking about tech stocks and stuff coming into earnings season. But you can see up almost 5% on the day. That's a pretty big move. So we should probably pay attention to that. Semiconductors and tech stocks look relatively happy. And actually, if we look at the futures, circling back to what I was doing there just a minute ago with you guys and girls, where were we? There we are. You can see big fat W's. That's a pretty big W that was put in there on the NASDAQ. So, it's the same logic as every other time we do this. So, where are reload zones? I do also get the impression that this Very popular guy on social media and trading world and all that. Mr. ICT, no idea what the hell the guy's name is. But anyway, and I think he likes to call this like his market structure shift, which just makes sense. Higher highs and higher lows is a bull. You go and break the most recent higher low. Well, now you've got a where did the bull go? Lower highs and lower lows defines a bear. So anyway, so think of each of these points as sort of validation that we're trending higher, and if we break that, well, maybe the uptrend is over. I think also too. I think you can make the argument that this is almost like an air pocket in here. I think he likes to call these air pockets fair value gap or something like that. So anyway, Mr. ICT, I think he's going to be hunting for setup somewhere up in this area. It would make sense. And what do you think the odds are? What I found quite often happens, and if you want to like take this down as a note, you can use this in your sort of trading tool belt going forward. I often find that the mountain man level, 61.8, lines up nicely with this concept, and failures often happen right in that level. So there is my mountain man default, and oh, what a big surprise. There is mountain man there, 16,848. So still got a little bit more room to run here. And really, I would make the argument, once we get into this air pocket, that's probably where you're going to find, if people do actually want to top this thing out. Like me, I'm a big fan of my reload zone concept, RLZ, and of course my favorite fib, 78.6. Notice how that is right up against that level. That would be my favorite, sort of like if I really had my druthers, level 2 short. But I've noticed recently, and just maybe make a note of this yourself, and as you're sort of watching the market, quite often these rallies will rally right up into mountain man and then stall. In fact, if I'm not mistaken, I think we just saw one like that. I think it was in the US dollar, and maybe we'll circle around and look at this in earnest in the after party. As sort of another proxy of risk on, like I said, if we're thinking January barometer, this would be risk on, stocks moving up through probably the next week or so. That wouldn't surprise me. We should see the US dollar weaker, right? We're the risk off proxy moving up here. A big breakdown here. You can see momentum wise, really beautiful bearish divergences. And as I said there just a moment ago, if you kind of think, this isn't really the best example, but yeah, it's not a bad example. Higher highs and higher lows. So your market structure, as we just keep making higher highs and higher lows, you can see that that was broken here. So now this bullish pattern here has been broken. And you notice there is one of those air pocket candles. I think he likes to call it the fair value gap or something like that. So what happens if we draw a fib from the ultimate low of this range back up to that high? And notice there is Mountain Man right there, 61.8. And we stabbed up into that level, and then we're rejected away from there. So there's actually a really good sort of real-time example of that concept. So I guess just the point being that especially with the way that momentum is looking here, very, very bad. I get the distinct impression that the US dollar index itself is going to come off as sort of risk catches a bid. Why? I went at length yesterday barking about the inflation deflation situation. And I believe that we are now back into, and it was just a short reprieve there where we were in a bit of a deflationary spiral. We put in this little double bottom, and I might even argue those people, especially at TRI, we seem to be having a lot of these conversations of late. One or two site members are very, very interested in trendline break setups right now. But I would make the argument that this thing is going to, these are the yields, so that means price is heading down. If yields are heading down, then that means price is heading up of the bonds. But this hasn't really officially bottomed. Our rule at TRI is, we want to see a W on the other side of the trend line. So, if that W does come in, then oh boy, we better be careful. And if anything, this makes perfect sense with that idea that keep in mind that's like a weekly chart if we go down to the dailies. I like the idea that the January barometer, the US dollar's coming off. There's sort of a reprieve about the US budget situation. Maybe things in the Middle East die down a little bit here. I like the idea that these yields actually can come down, i.e., bond prices can go up into that middle of January. And that's that same January barometer. We're looking for stocks to move up into the middle of January. So, yeah, we should probably wind this up fairly soon. So, thank you, sir. So, the point being that, looks like bond prices are relatively happy here today. We go and look at the actual bond charts. You can see, bond prices moving up. Long end of the curve's actually got a W working. So as we said, yields are coming off. And as a result, I think the stock market actually likes that. Also, too, if yields are coming down, especially we talked about the short end of the curve, this is really sort of the market's proxy for Fed funds and all that. If yields are coming off, i.e., bond prices are moving up, then that should actually. Oh, no, I lost my train of thought. So well, I mean, long and short of it here, bond prices moving up, market should be a little bit happier. And why would they be moving up? Well, maybe because they were not so worried about inflation, i.e., the crude oil price just fell 3 or 4%. That's deflationary, not inflationary. And so as a result, bond prices moving up, yields moving down, stocks are relatively happy. And of course, we also talked a little bit there just a moment ago about the fact if energy prices are coming down, then tech stocks can do better because of the whole sort of purchasing managers issue that we've talked about lots over the years. So anyway, blah, 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 blah. Finish off the conversation. I think on balance, crypto is very, very in tune with the tech stock market. You can see NASDAQ doing pretty well. And it looks like the crypto names are doing fairly well here. So, I think my message yesterday in the sort of free video was it's not really like Bitcoin's a sell here. I still think that we're working our way up. We have some really, really big technical objectives up here. I would be really surprised if they weren't hit, considering how close we are. There are no M's here, and we're not really in great short trade location, right? Red boxes, reload zones. That's where the short trade location is. So, we got the ETF coming ahead of us. We've got the halvening event coming ahead of us. The SEC appears to be relatively impotent of late. And frankly speaking, I don't hear anybody anywhere bad mouthing Bitcoin. If anything, if there are problems in the space, it's more about the Schult coins, right? We don't want to swear. Although I sort of corrected myself at the very beginning of the video yesterday. But then, like 10 minutes later, I'm just swearing like a sailor. So, my apologies, everyone. I really got to try and get my act together. I should have like a bar of soap right beside me. Every time I swear, I got to take a lick of the bar of soap or something to get my act together. Anyway, so I think probably your best bet to follow like sort of I don't know, the general sort of path of crypto is to follow this total crypto market index. We've talked in the recent past about how we have relatively, I'm going to say relatively acceptable trade location, 2.618 reload zones, mountain man, blah, blah, blah. You know how it goes. So that was step one of our three-step process that we're looking for to set up trades. Second step is we would like to see indicator confirmation, i.e. when we look down at our indicators, we want to see that they're all heading down. and yet price is still stubbornly strong. And then if you get a big fat M in price, then we actually have a potential short trade setup. So I think on balance, we're headed up into trade location. Could we play around up here for a little bit? Sure. I think the last time I did this conversation with you, we were at the point of asking whether we have indicator confirmation. And the last time I talked with all of you, it was the exact opposite. We had basically like 6 or 7 potential divergences and 1 or 2 confirmed. So you can see how the process here is slowly shifting. Now we have 6 confirmed divergences, MFI, CF, MF, Squeeze, MoMA, Willie, MMF, RSI, right? So you can see the divergences are starting to pile up here. And really the question now is, you can see the moving averages are still positive. As you can see on what I've written here, and this is what I posted on the site for everybody, is do we actually start getting big fat M's coming in the market? Did find it interesting, and we'll probably review this a little bit more in detail in the after party. But our dashboard, and again, our CTO is sick right now. Hey, I think he is getting better, but notice a brain fart for our weekly commodity trend survey. But we do have the crypto here, so I suppose that's small consolation. And one thing that I noticed here recently, the point I'm trying to make is we had a whole bunch of 2s here recently. I don't know whether you remember that. Like there were a lot of altcoins and cryptocurrency names kind of idea that were up at the top end of their ranges, and they were looking really dangerous. And we've had a lot of these altcoins come down, a big chunk here recently. So I think you can make the argument that the market is trying to clean itself up, like this one, for example. But you can just go through the list. In fact, actually, there was one that I wanted to buy, and the Coinigy co-host, he was PMing me all in panic. Joe, hey, this spell's hit Mountain Man level, right? So there are names that are starting to work their way back down into buy windows. But there were some names in this space that were actually looking a little dangerous. And if anything, I was kind of pleased the other day to see a bunch of these names, especially TRI CTO. Try saying that 10 times fast. He does absolutely incredible fundamental analysis. But the problem here is you can't buy this asset way up here. You're just asking for trouble. So you can see this is the process of the market working its way back down. And you might even argue that, we're actually getting relatively close to 50% levels here now. So there's the 50% level. Look at that. We're within a hop, skip, and a jump. And you can go through a lot of these names, and they all sort of look like this. So if anything, it's encouraging. I don't know whether I would consider that a buy. If anything, you can see where I'd want to be a buyer if I wanted to buy. But just the point here is that, when we were way up here, and the weekly commodity trend survey was just spitting up just a ton of 2s. It was sort of like, oh boy, this is trouble. Now you can see that almost all of our universe is split. There's the 3s and the 4s. These are basically neutral readings. And then we actually are starting to build the list of 5s, which are sort of potential buys. Just give me a nice W to work with on the daily charts, and I'll get in there. That number's starting to grow again. And we only have 2 names that are still, I would consider, dangerous. And it's ironic that they're sort of probably the 2 more senior names. I suppose ETH could be up here. But Solana, of course, has been an absolute darling of the market recently. I've noticed some of the little pieces of poo Schult names over there on the Solana network are starting to firm up. So maybe we'll see that start to come back. But just Solana itself, there's the chart, right? We had bullish upside objectives hit. Got big fat M staring us in the face. If anything, this is a good example where, the weekly, this is why I do the weekly commodity trend survey. This is saying that, if you get any kind of daily short setup in here, that might fire a 1 here. I think the only reason why this hasn't fired a 1, um, it's probably because the weekly chart just hasn't broken down just yet. Yeah, it's still pretty uppy. And if these moving averages actually cross back bearish, which I don't think that they will. If anything, I would almost consider this like pullbacks or buying opportunities. Just get this thing out of that 2 reading, kind of like the rest of this market's cleaning itself up here. And then we could maybe thinking about going and buying it back. But right now, I wouldn't entertain buying these things. And if you are shopping for crypto, there is quite a bit of a list. And actually, it's kind of interesting. While the market was kind of coming off there, I did notice that actually things like Ripple were starting to firm up. And I was just like, well, that's a bit odd. But if we go over here, yeah, you can see Cripple's up 2.5% on the day. So this, ironically enough, is actually back to a buying window. So hopefully you can understand why the system actually doesn't mind this. This isn't a bad investment idea. If you drill down to maybe like a daily chart to really time your purchases, or even 4-hour if you want to get crazy, this thing is at the very least, it's what it's done right now. As you can see, it's just come back and done a Wyckoff check. And I do find it interesting that this is actually pretty close to being in an acceptable buying zone. And as I said, the real sort of speculative ones that I've been talking about recently that could be bought. I thought it was interesting that this spell stabbed into the reload zone here this morning. I don't know whether I certainly don't have a buy signal here on this. I mean, I'd have to get like at least an inside bar, maybe a W or something. But there are names that are buyable in this space, so that's good to see. And like I said, weekly commodity trend survey is actually I'm actually surprised there are as many 5s on here as there are, suggesting that actually this market isn't that bad. So go figure. Okay, I think that's about it for the rant here today. The only thing that I'll mention, just leave off for the public broadcast. Of course, we have our new school term starting shortly. Be sure to sign up for the raffle. Chris, I don't know whether you include the raffle link in this free video, but always a bonus if you can do the school program for free. So we also in the after party here today are going to talk a little bit about meetups. I think TBG's with us. I'm not quite sure where he is. So we've got that on the go, but I also wanted to show you that we have where the heck is it? God, so many darn links. Anyway, we got a raffle around here somewhere. Where is the raffle link? Oh, I hate when I stall out like this. Oh well, I can't see it. Hey, there we go. I love how Chris is reading my mind. Okay, we better get that damn raffle link for him so he can show it. So be sure to sign up for the raffle. At the very least, you maybe get the education program for free. And then, I like the idea of building a database of people that are interested in what we do, and be able to talk to you on a regular basis. We've got the meetup that we're going to talk about in the after party here today in about a month and a half or so, down in El Salvador. It's going to go kick the tires and see what the hell the place looks like, and Bitcoin Beach and all that kind of fun stuff. And then I was asked by Josh if we could just mention the TRI PMA Twitter feed. Josh has actually put together a highlights tab. I actually retweeted this because it was so funny. I don't know whether we can play this on the YouTube video.
www.buythefuckingw.com. You think it's easy finding fucking gold mines? Ha! Totally turned it around on you. There you go. PMA for the win.
That was a couple of years ago. Geez, incredible how fast time flies. But Josh suggested we really should get this TRI PMA feed a little bit more active. But Josh suggested he put together highlights here. these are all some of what he thinks. I mean, God, if anything, go to this and grab this screenshot. I mean, what's super cool, I don't know whether you can see, I don't know whether I can show you, but we even have a coffee mug with this image right on here on our merch store. I think we have it in our merch shop. But at the very least, just go to this TRI PMA page and just grab this image. This is basically like a cheat sheet of how to trade the market right there on one image. So, all right, I think we'll leave the video at that. Sure hope you got some value out of all that. PMA for the win, slow and steady wins the race. Looks like risk is catching a bit of a bid here. So let's hope this continues. And, as long as the bonds are happy and things like inflation proxies like energy continue heading lower, then I don't see why this dead cat bounce can't continue. I suppose the only thing that we didn't talk about, why is the big blue chip brick and mortar underperforming? And that's, of course, all about Boeing stock here today. So a very isolated story that's holding the Dow down. So, all right, have yourselves a great day. PMA for the win. Slow and steady wins the race. Remember what your number one job is. Don't take no with nickels. All the best and bye for now.